Well, Palantir has been an absolute runaway train, basically hitting all-time highs after all-time highs. Basically, every week, it's at a new all-time high, and the run is just amazing. But the question becomes, can this run continue, and what Wall Street actually thinks about the stock? Because, of course, if we know that, then we know exactly how they're going to trade the stock as well. So we got to know the answer to what they're thinking too. All right, so we're going to break all this down for you guys today, discuss everything, Wall Street, valuation, where the stock's going. We're going to kind of piece it all together here and get you guys a complete picture of where Palantir is at today as it continues to bang through all-time highs among all-time highs. It just, I don't know. It's an epic run. So make sure you like the video if you like getting the truth without the hype, because that's exactly what we're going to get into today. What's hype, what's not, everything else that's going on with the stock, goods and bads. Hey guys, we're going to talk about it all here. So I saw a piece today and it basically gave a perfect outlay of Palantir, what Wall Street is thinking about Palantir, where they have it right, where I think they have it wrong, and everything else of that nature. So it was a great little breakdown discussion here. And I kind of wanted to give that to you guys and kind of break it down along with you guys. So that way we kind of parse through the truth. And then at the end, we'll discuss valuation as well, because you guys know that is the critical piece for me with any stock.
Senior markets contributor here with the Schwab Network. And today we're going to be highlighting Palantir. Palantir, as we know, is one of the premier companies in the artificial intelligence space. This is a company that essentially is deploying its software applications and data analysis that is born from the Department of Defense. In other words, a government contractor, and they're actually deploying it now into the private sector for commercial applications. And we know artificial intelligence has been the theme of the past couple of years. And Palantir is really a demonstrative growth story in that particular space.
Yeah, so definitely been the story. Palantir definitely was not the darling of Wall Street a couple of years ago when we were busy buying up the stock like crazy. They didn't get it. They didn't understand it. They were too busy chasing ChatGPT and all this. I'm still not sure that, well, yes, they were busy chasing ChatGPT and everything else because I think they understand it. I think it speaks their language. I think it's highly understandable. They're starting to come around to Palantir, but I don't think everybody on Wall Street understands what Palantir actually does and what the opportunity is. They absolutely understand the trade right now. They absolutely understand the hype right now because that's Wall Street's specialty. That's what they do. But in regards to what Palantir actually does, as you'll kind of see, he gets some things right. Some things just kind of sound like, I don't know, the generic, paper piece that comes out, every week about Palantir. And so it kind of gives you a little bit of insight in regards to what they're thinking, why they're into it. But more importantly, start talking about some things and they'll kind of pretend like they were on it 2 years ago, but they weren't. They were the exact opposite. Very, very bearish on Palantir, actually, whenever you actually go back and watch what they were saying back then when we were busy buying it up like crazy.
Initially started off with their Gotham software for the Department of Defense. It's primarily a data analytics and artificial intelligence platform. One of the growth stories behind Palantir is its commercialization. It's actually deploying its technologies, including its artificial intelligence, for the private sector. So when the company reported earnings going back to the 3rd of February, the company demonstrated some significant growth both in earnings and sales. The company posted about a 14 cents adjusted earnings profit. Now that grew about 75% year over year, while at the same time the company boasted an increase of about 36% in sales at $836 million.
All right, before we get too far there, I just kind of wanted to point out, when your early stage growth like Palantir is and your EPS growth is in pennies, I'm not knocking Palantir. It's not a knock. But seeing these outrageous EPS growth rates like 78% or 85, I can't remember what he said now. But seeing outrageous numbers like that are not unusual whenever you're only spitting off a few pennies worth of EPS in the first place. It's part of that early part of the journey. That's why the PE ratio for early growth stage stocks looks so ugly. Think about it. You can have a 200% growth rate if you go from 2 cents to 6 cents worth of EPS, right? That's a massive growth. And you're just, well, actually, it's only 6 cents. It's not a lot of profit. It doesn't take much in order to put you back in the negative again in regards to that. So those are some things you got to kind of keep in mind when you see outrageous jumps in EPS. Of course, I love to see it, but you got to kind of contextualize it. That's totally different than a stock that's spending off $3 or $4 earnings per share. And then all of a sudden it jumps to, $7 earnings per share. That's a big difference. That's a much larger jump in profitability than somebody going from 2 cents to 4 cents or 2 cents to 6 cents or whatever the case is. So you got to kind of keep those sorts of in mind and kind of contextualize them, that although I'm not knocking the growth at all, it's great. You got to start somewhere, right? But seeing that and then immediately extrapolating out, stock prices are also going to go up 75% because look, they're growing EPS growth at 75% or 85%, whatever the number is. Not necessarily the most accurate picture there. More importantly, that growth rate is going to decline as time goes. And of course, as those EPS numbers rise. Of course, as EPS numbers rise, the valuation comes back down. So you kind of see how the stocks kind of reach a tipping point of where we actually get back to a much more reasonable earnings multiple at that stage. But that's one of the reasons why you see it so high. Now, on the flip side of that, the bear argument per se, not necessarily a bear argument, but the flip side that we need to be careful about as retail investors, and this is critical, guys, is once this time is up, once they start spinning off, $1, $2 per share EPS growth at that stage, then those high multiples like you're seeing right now don't make nearly as much sense. And the best example I can give is Tesla in 2021. They had already gotten past and blown past all those easy comps in regards to massive EPS growth, year over year, quarter over quarter. I mean, it was just like boom, 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 boom. But once it gets to a certain point, all of a sudden people were saying, hey, that PE is justified. It's totally justified because look at their growth rates. Look at this, look at that. When the reality was the EPS growth rate had slowed down significantly because the EPS had gone up so high. So it wasn't at that early stage to where maybe it made a lot of sense to overpay, quote unquote, for Tesla whenever it first turned profitable. But a year and a half later, 2 years later, after that big explosion of EPS growth, that bottom line growth happening and getting to a certain level and slowing, just simply looking at, well, deliveries are going to go up 50% year over year. So therefore, we should just be thinking it's the same exact stock that it was in terms of valuation perspective a couple of years prior whenever they first turned profitable. And that's simply not the case. Matter of fact, the exact opposite ended up happening. So you got to kind of not trick yourself too much in there and understand that Palantir gets this sort of leadway right now because that multiple is obviously going to come down as that EPS growth goes up, meaning that right now it's not exactly the same scenario as it was in Tesla 2021. Although at this rate, if it keeps continuing to jump up the way it did, we're going to quickly be in that scenario where we got to make some decisions in regards to this stock that we don't want to make as long-term buy and hold investors. We just want to hold the stock and hold a great company, more importantly, which I don't think any of us think Palantir is not a great company.
There were some highlights that are significant to Palantir. One is their commercial growth for the quarter grew about 64%. So it gives you an idea that the company has been growing its private sector distribution quite nicely. The other thing is their government contracts grew about 45% year over year. Total contract value for the quarter also was a significant increase by about 134% compared to the same quarter last year. While the company's been growing its sales and earnings more than double digits, the company has also been boasting profitability metrics that are quite robust. In fact, if you look at the free cash flow for the quarter as reported by Palantir.
Free cash flow is the key metric to look at, in regards to Palantir. That's what told me way back in 2020, 2021 that it was a great company. Not that it was significantly overvalued then, that's why I didn't buy it back then. But it told me this stock is something special. This company is something special. They're doing their financials differently than every other company does. They're not making them look nearly as good as they could if they wanted to. Free cash flow was the tip off for that. So I love the fact that he's actually bringing that out there and using that as opposed to some of the other folks who are, trying to show you these little bear narratives that, oh, they actually don't make any money. Well, let me look at this. Let me do some financial wizardry here and show you this and show you that. And, conveniently leave out other things that disprove that. But don't let facts get in the way of a good bear narrative, right? Don't do that.
The yield is about 63%. The company generated close to $500 million in free cash flow, while at the same time, the customer count grew about 43%. For the fiscal year 2024, the entire year, the company boasted total sales by 29%. But the other thing is the company raised its guidance. If you look at fiscal year 25's top line sales estimates, they're expected to grow by 31%, while earnings growth is expected to continue to about 40% of total sales. Now, Palantir appears to be well positioned within the context of the second Trump administration.
By the way, right there, you're able to see and be able to appropriately put a valuation on the stock right there with those numbers. They gave them to you for 2025, which means you can easily look forward and project those things out. Trying to project out 10 years, as we've discussed many times, is absolutely useless to your investing. Don't engage in those games. But right then and there, you can get a good valuation right there from those numbers.
The company helps integrate complex data sets. It helps improve operational efficiencies and also provides data analytics for the private sector as well as the Department of Defense. If we look at Palantir, at least on a year-to-date basis, the stock is...
All right, so in regards to those government contracts there, we'll cover it real fast. Just keep in mind, although I think obviously what they're trying to do currently, obviously that's Palantir specialty, but those contracts take a lot of time to get awarded. And more importantly, there's a process to it. There's a government process to it. Takes forever, study some defense contractors and some other people like that to understand that process and how long it actually takes versus how long we all think it takes. Even once you're awarded, to get funded and everything else is a whole separate argument, takes a whole separate bunch of hoops to jump through and such. And we've seen that with Palantir in the past repeatedly, where that government contract money just lags. So it's great that you see it, but understand that you don't get to like double dip or anything else of that nature. If they push it up a little bit because of some big contract announcements, it's done. It's already priced in, and it doesn't matter whenever it hits the bottom line 6 months, a year later, a year and a half later, whatever the case is. So for a lot of those contracts, I suspect we're not going to see the bottom line impact for a couple years in regards to those.
Doubled. It appears the company, as generating more contract value for its end customers, has actually been taking away market share from its competitors, primarily some of the legacy players in the defense technology space. That includes Booz Allen Hamilton, Leidos, Khaki International. These are competitors in the legacy defense space that have performed poorly on a year-to-date basis. Now, Palantir's unique value lies in its ability to integrate complex systems within artificial intelligence ecosystems. The other thing is it's providing its clients with actionable insights to help them make better decisions. Not only is Palantir growing in the double digits on a percent basis, it's growing profitably. If you compare Palantir's gross margins at over 80%, that gives you an idea that the company is generating high returns on equity relative to total sales. Despite the promising commercial growth revenue over 64% year over year for Palantir, as denoted by their Q4 earnings, there are some risks that we have to consider with this name. First off, there are some geographical imbalances to consider, especially with top-line sales growth in the United States being the majority proportion of how Palantir generates sales. If you look...
All right, this is one of the stupidest bear narratives that I hear all the time. Growth is growth, and the place you want to grow is in the United States. I'm sure he'll touch on Europe and some of the others about how they're reluctant. Who freaking cares? You want to market to the American consumer. You want to market to the American business. Right, wrong, fair, indifferent. It's not a knock, but that's where the money is. That's where the big money is. That's where the big contracts are. That's where the companies that are, have to provide massive profits right now. They don't have time. It's a very, very different system than Europe and the rest of the world in regards to that. And it lines perfectly. Everybody knows that. That's where your biggest impact is. So as long as they are growing in the US, I'm not concerned that they're not growing other places. It doesn't freaking matter at all. As long as we are seeing growth, I don't care what the mix is. Hey, Europe happens to get on board and follow on, and then all of a sudden we start seeing massive year-over-year numbers in Europe. Great. Guess what? If we're not seeing it in the US, I'm going to be concerned because that is where the money is. That is where the big dollars lie. You just look at GDP. You can look at anything else you want to. That structures the entire nine. Everything is just different. That's why the biggest of the big companies are right here in the United States on the US stock exchange. And when you're trying to find something, I guess you can find that, hey, European growth isn't the same as, the US growth. Great. I would also say that our economies have been more robust. We have not had some of the same issues coming out of the high inflation period that Europe has had. There's been so many things that are slanted almost unfairly in the direction of the US in regards to this. Great. I want them to continue to dominate the US market. That is where I feel the growth is most important. Everywhere else is great. It's a cherry on top for me. Don't care. US growth, commercial and government is where it's at for me in regards to the big money for this stock.
European sales, which represent about 13% of total revenues, they only denoted about 4% growth in that particular area of the world. Now, in context of some of those geographical imbalance risks that Palantir may face going forward, there are also some concerns that analysts have based on valuation. For instance, if you look at the fiscal year adjusted EPS of 55 cents expected for 2025, relative to the current price, Palantir is trading at over 200 times its forward earnings. That would be considered lofty relative to even 47% earnings growth.
Yep, I can't argue there. That's the downside risk. I wish they would have given us 2 years because then I really could have pinpointed that number down in terms of giving you that true, getting rid of what we talked about at the beginning in regards to valuation, kind of the beginning of your journey when you're in the pennies range of EPS. If we would have gotten that 2026 number, basically it would have been like, I don't know, $1.15, $1.20, $1.30, $1.50, whatever the number ends up being for that 2026 guidance. That right there for me would give me a much better indication of, okay, right here's kind of where that crux point is to where you can't expect crazy multiples to continue to be paid for this stock, even for the traders they're going to start moving out of the trade at that stage. Now, we just don't know where that mark is yet, so I can't tell you where that mark is yet. But that right there, I can't argue with that bear point there. The first bear point was stupid. That one, absolutely a concern for every investor out there. I don't know too many people outside of the extreme pumpers who are trying to tell you this is a steal deal, great value right now at these prices.
At the weekly chart, taking into consideration the relative strength index at over 83, one would say potentially the stock is overbought. In addition to the high RSI, if we take into consideration the stock's 20-week moving average, which is roughly around $80, the stock seems to be retracing those levels as a trend continues to the upside.
I totally forgot the Sigma Rizzler line right there. That's why his charts have been accurate and why he's missed it routinely over time. You got to draw that line on your chart, then you're good to go. You're golden. That always tells you when to buy.
Strong financial performance, the company's reliance on a few large contracts poses a risk to Palantir if these contracts are lost or not renewed within the...
Again, another bear narrative that just they simply either choose to ignore or don't understand government contracting. There is usually when you lose a contract of sorts, it's from lack of performance, which we know they've just been getting more and more and more government contracts, not, hey, we want to get out of contracting with them. And oh, by the way, even when you lack performance, take a look at the defense industry. For lots of companies that lack performance on their contracts with the government, they still get renewed because it's so hard to switch vendors in that particular space. Again, if you're going to own a stock that deals with government contracts in the US here, you need to understand that process. Go learn it. It will help you out so much with being able to completely ignore narratives like that or being scared of narratives like that, because that is simply not how it works. You can, I hate to say you can underperform on a contract and still get to keep your contract, but sadly, it's the reality for a lot of our defense contractors out there. And you're trying to tell me Palantir hasn't performed? It's done the exact opposite. The government can't get enough of it. So for me right now, that's not a risk. Anytime soon, anytime in any reasonable time frame we can project out. Okay, so we'll go ahead and end the video right there. Kind of gives you a, I hate to call it, there was less narrative, just kind of more of a, hey, this is kind of the baseline Wall Street kind of case for and against Palantir. And as you can see, the only real valid piece that they gave us that you could validly say against Palantir is simply the valuation right now, which you guys know, I can't disagree with that at all. It is overvalued by any metric. Now, the other thing that we talk about with stocks all the time is that a stock can stay irrational longer than you can stay solvent. That's an old Warren Buffett quote, or a take on the Warren Buffett quote, I guess would be the best, since I probably didn't quote it perfectly. But that's kind of the reality we're living with Palantir right now. Are the earnings going to catch up to the stock price, or is the stock price going to come back down to the earnings? That's the question we're all left with right now. This is also why I tell you guys, have a plan for every single stock, plan for every single scenario. More importantly, when you get opportunity in a stock, don't freaking wait. Buy a great stock at a great price. That's it. You've had 3 years now to buy this stock at a great price. Those are facts. You could even buy it last year in the $20 range, in the teens, if you can believe that, earlier on in the year. Those are facts in regards to this stock. Those are the only things that I can kind of teach you in regards to investing, is when you get an opportunity in a great stock at a great valuation, you just buy the stock, even though you're probably going to be wrong in the short term, right? And that becomes kind of the dilemma is, okay, you know, let's say you buy it at, let's say it does start to fall and you decide to buy it at 80, and let's say it falls all the way down to 60. You feel pretty dumb buying at 80. Well, yes and no, depending upon your hold time and everything else. If this turns into a $500 stock in the future, does it really matter whether you bought it at 80 or 60? I mean, obviously you'd rather have the 60. Of course, you'd probably rather have the $7 or $8 back when we were buying it then. If you missed all those different times because of a variety of different reasons, that's okay. You've got to understand and look forward. You've got to keep that long picture in mind whenever you're buying a stock, and don't buy it because there's some YouTuber out there telling you, hey, I secretly think this valuation should really be $300 next year, or something ridiculous like that. Now you're buying hype, you're buying hope, you're not buying the company and the fundamentals, more importantly, which is what always matters in the end. Now, the easier way to deal with a stock whenever it's at this level and you haven't built out a position yet, you're deciding what to do or whatever the case is, just do a simple DCA. We've been saying that from the start. Every time it ran up, got itself overvalued. Hey, popped up over $20 per share there for a little while. Of course, I was patient, I waited, and it fell right back down to where I wanted it to. But if you weren't comfortable doing that, just start a DCA. We talked about it back then, 2 years ago, 3 years ago. Just simply DCAing is really, really hard to beat, and it eliminates the emotion, eliminates anything out of this in regards to that. More importantly, share count is what matters. not your average. Too many folks, oh, I got 1,000 shares at $6, but I don't want to blow up my average buying the stock. And it's like, well, I'd rather own 10,000 shares at a $35 average than, 1,000 shares at a $6 average, for example, or $7, whatever the heck the numbers end up being. Sorry, having more shares, if this stock goes to 500 in the future, and I'm not saying it will, just throwing it out there for an example, I'd much rather own 10,000 versus 1,000 shares, but people don't think that way. We get hung up on all sorts of little things. That's why DCA eliminates all that sort of stuff. Just DCA for the next 5 years. If you believe in the stock for the next 5 years, great. My guess is you're going to be a very happy shareholder overall. We had group members jump into our group. Same exact question when Palantir got overvalued the first time. Hey, just execute a DCA. Don't worry. The stock will come back to you, but you'll be happy you started your DCA instead of waiting for something in the event the stock happens to the moon. And sure enough, basically 6 months or a year later, the stock goes to the moon, but this person added shares over and over and over and over again in the meantime, whether it was overvalued, undervalued, whatever the case was. And of course, they're very, very happy with their shares right now in regards to owning that. So, and if you don't know how to do that, how to get a valuation, how to understand price targets and everything else, I may have left something special down in the pinned comment for those that have stuck around the video this long. So make sure you check it out. If you want access to 5 courses, free coaching, you want us to show you exactly how to do all that, see my buy and sell alerts in real time, my complete watch list with price targets, guys, everything's included. Make sure you check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.